Good afternoon and welcome to NYFP. This afternoon I'm joined by Bobby Heller of OnPoint Executions. Hi Bobby, thanks for joining me today.
Hi Remy, pleasure to be here.
Well, we're here on this Friday afternoon and it has been quite a volatile week. Now U.S. stocks and oil are down, but the U.S. currency is up. Now there hasn't been that much good news out there, but do you see any opportunities?
It's kind of tough right now. Like you said, there hasn't been too much good news out there. But I think a lot of what people have been looking at is some of the things in Europe between Greece and now that we're talking about Italian banks. And now that's caused people to put some spillover into the U.S. because although the U.S. banks don't have a lot of particular exposure to Greece, they're looking at it and saying, well, if things go down, the potential here is to really hurt everybody. One of the things I'm looking at is this debt ceiling vote coming up, and I think professional investors here are finally starting to realize that maybe we're being held hostage a little bit over this debt ceiling vote. The thought that we could possibly shut down the government and maybe default on some bills here would have a devastating effect throughout all markets all over the world, and I think that's got some people nervous lately.
Well, Bobby, it is really hard to price in everything that's happening around the world, but I do want to ask you about the latest move from the IEA and the Department of Energy. Now, crude oil prices do remain below $91 a barrel, but how are you factoring in the latest moving crude oil prices to your overall strategy?
Well, I think what I've been hearing is that there's talk that President Obama said maybe we'll open the strategic reserves, and that has enough, not that he's actually going to sell anything out, but it has enough people thinking like, well, maybe this is it. There were some people saying that it's not a good idea because it's not what it was meant for, but, with so much of the Middle East in turmoil right now, and like Libya, for instance, is 90% shut down in terms of oil production. I think the idea that, our government is there standing by to sort of release that and help people out, that has a big effect on the markets here. I think it's got a tremendous positive effect. It's almost like the Fed printing more money, except they're printing more oil. With that, the price, I think I still look for the price of oil to come in a little bit, and if I was going to be long or short, I'd rather be a little bit short oil right now.
Okay, Bobby, last but not least, before we wrap it up, it is the end of the second quarter next week, and we will be kicking off the third quarter. Now, in terms of earnings, what do you expect to see in the various sectors?
Well, I think most sectors, the earnings will continue to be positive side, but I don't think they're going to be as bold as they have been. I've been saying for a while that, a lot of companies have been making higher profits on lower sales, and you can't really continue that for a long-term trajectory. I think they have to look to try to get higher sales and increase that. I think the problems here in the U.S., even though the economy is growing a little bit and everybody likes to say how, the stocks can still go up, I think people on Main Street are having a real hard time buying things, especially with, the way oil has been up for most of the last 6 months and the price of gasoline. So, like you said, there are a lot of factors that go into all of this, and I think the price of oil coming in will help out a little bit, but I don't think we'll see like real gangbusters earnings, from any sector.
Okay, Bobby, as always, thank you so much for your time, and thanks for all your insight.
Okay, it's fun being here.